the S&P 500 could absolutely fall a lot. When we've seen past recessions, the S&P 500 over the last 8 has averaged a decline of approximately 23.8%. We don't have a declared recession yet. There's no question there's a lot of strain in the economy and the stock market, and anyone telling you what to do and how to do it that's not your own advisor, please take caution. Does that mean that all stocks may fall? No. I mean, if we look at 2007 to 2009, Walmart in the consumer staples sector actually increased. You may not find many companies that do that, but there are certain recession-proof type companies. So keep in mind though, because there's so much volatility, you want to have a smart strategy here. As an individual investor, the problem with making all these changes is you end up chasing different companies, different strategies that may only work for a little bit of time. I strongly believe you're better off creating a stock portfolio that can weather any storm, and that if you have a longer time horizon, 5 plus, 10 plus, 15 plus years, then you shouldn't worry so much about what's going on in the short term. I'll be honest, a lot of people are going to lose sleep, and they do lose sleep during these time periods, especially when all of a sudden portfolio is down 10, 15, or 20%. Keep in mind, look at the history of the S&P 500. Generally speaking, investments over time do bounce back. If we look at the S&P 500 here, throughout the 2001 and 07 to 09 recessions, we saw it recovered. So the amount of time that it takes may be varied, and that's why it's important to understand your own risk tolerance and your goals. So anyone who's trying to talk about the most undervalued stocks in the market or the best stocks to buy now, I'd probably stay away from that video or that information, because truthfully, do we really know what's going to happen in the shorter term? No. And the problem is that even if it is a great stock, what if it drops 20, 30, 40, 50, 60, 70, 80%? It may recover, but is that something you're really going to be able to handle? Because I'll be honest with you, even the best investors would not be able to see a portfolio going from $1 million to $200,000 that easily maintain that strength and confidence and conviction to actually hold it, even if eventually it was going to be a $3, $5, or $10 million portfolio. To get through the tough times is very, very challenging. Psychologically, especially if you're investing money that is retirement for you and your family, or money that's really important to protect your wealth, when people see certain drops, all of a sudden you can have the strongest conviction in the world, and that may change like that. So be smart, please. Make sure you have a strategy and plan in place. This video is not about talking about that, and I am not a financial advisor, so I don't talk about personal strategies or plans for anyone. I am going to give you a heads up though, that in the past we've seen drastic drops in the S&P 500 and of course in individual stocks too. I mean, look at NVIDIA over the past month, look at Tesla over the past month or even 6 months. That's why it's so important. Do your research. If you create a strong portfolio, or if you already have one, you really don't need to be checking the market daily, weekly, monthly, or even quarterly, in my view. Things are going to happen. Of course, you want to have a plan in place with how you're going to deal with certain things, and perhaps you want to have certain things on auto invest. That is totally up to you. But just keep in mind that those who say you can't time the market, but then they try to time the asset class by jumping into another asset class, or trying to time the economy by saying, okay, this is going to happen, let's take our money out and put it in a different place. That is timing the economy or timing asset classes, and it's not drastically different from you can't time the market. So just keep in mind that during times like this, there can be a lot of contradictory statements that are made. Stick to what you know. And if you have no idea anything about investing, well, learn, because there could potentially in 6 months or a year be tremendous buying opportunities. There could not be. Who knows? But if you look now and you see the S&P 500 is at about 5,500, and all of a sudden in 8 months we're at 42, 4,300 or less, well, could that potentially be a buying opportunity? That really depends on the research you've done and the valuation where you think it's going in the future. Again, I'm going to show you a chart on the screen of what has happened. Use this information and learn. Now is a great time to learn. Making rash decisions because X, Y, and Z happened could really, really hurt you in the long run. Because what if you think a certain company is really going to weather the storm and they really don't, because you didn't do enough due diligence or because you listened to someone else? And again, all of a sudden that investment drops 20, 30, 40, 50, 60, or 70%. Even if you had a strong conviction, are you going to stay in or not? That's a question to ask yourself before you invest into anything, especially given the volatility, politically, not politically, interest rates, the Fed. So much is going on, and you want to be sure with what you're doing, especially in a time like this. I can't tell you what to do, but if you're unsure, just don't make any rash decisions. That's what I will say, because you want to be certain with what you're doing. And most often, people have not done enough due diligence or research into the companies that they're going to invest into. That's why I always recommend doing a 5 or 10 year projection. Where do you think the company's going? What are the reasons why? And what are the risks of investing into this company that could potentially cause that company not to get there? We are in a very delicate place in the stock market and in the economy. The decisions that you make today, tomorrow, or maybe that you've already made are going to make drastic impacts potentially on your own wealth and that of your families. So it's so important to make strategic and smart decisions. Don't just guess. You want to have data, you want to have proof, you want to have conviction behind any decision you make. And this is a general caution, PSA, warning, because I don't want to see people making decisions, and I know it happens all the time, that they're going to regret for the rest of their lives. And that's just the honest truth. Because if you put money into something that someone else tells you is a great decision, but you didn't do your homework, and then you get burned, you're the one who's going to have to deal with that. And you're going to have to explain that to your family. But instead, there is a possibility that you could have avoided this. If this helps even 1 or 2 people, I will be happy, because I just want to get the word out and I want people to act with caution. If an advisor's talking with you about things, that's not my area of expertise. That's something to talk with them about, but still ask them questions. If you are involved of why are we making this shift? How does this impact long term? What do you see happening in the next 3 months, 6 months, 1 year, or 2 years, even though no one has a crystal ball? But understand their methodologies. And if that aligns with you, that's up to you and your advisor. If you're investing on your own, it's a different story, because you're essentially answering to yourself, and you need to be 100%, maybe we're never 100%. You need to be very, very certain about any decision that you make during a time of such extreme volatility and during a time where we could have a recession. There's no calling a recession yet, as NBER, the National Bureau of Economic Research, the organization that actually declares recessions, has obviously not declared one yet. And typically, it can take months or years from when the recession starts to when they actually declare it. So keep in mind that there's going to be a period of uncertainty. But as you can see on the screen here, this is what has happened in the stock market throughout history. Of course, it does not mean that this exact pattern is going to follow, but understand what you're investing into and whether that suits your own long-term goals and if that suits your risk levels. Is this money you can afford to lose if something happens? Or are these speculative decisions that could totally destroy your future? Thank you so much for listening. If you enjoyed this video, please make sure to hit the like button. I would really appreciate that. And if you're not already subscribed to the channel, please subscribe, and look forward to sharing more information with you. If you're interested in learning more, check out the description below. I'll share some more details with you to help you stay ahead, so you can do everything possible to try to target outperformance or higher returns in the stock market. At the end of the day, it's doing so in a safe way that works for you and your family. Thanks again for listening. Have a wonderful day.